Another topic, and I mentioned earlier, I just published an article in Forbes today on the topic of decentralized finance. Really, decentralized finance is the first ever fintech. And the reason why I say this, keep in mind, we are technology investors and we are VCs, so we have a very long-term horizon, meaning at least 5-10 years into the future. And from that perspective, we take the position that real technology is deflationary, meaning it reduces the cost of a product or service. And so this hasn't been true for things in the past that were marketed under this marketing term, fintech, financial technologies. If you're looking at your usual suspects like the PayPals, Zenefits of the world, really what they are, they're window dressing solutions to legacy financial systems. They all still work with banks. They all do KYC in some shape or form. So they are not fintech in the narrow sense that we understand it. So decentralized finance solutions from our narrow perspective as technology investors are the first fintech. So here's an example. I'll make a few of these examples to drive these points home that I'm touching on to make this more tangible. So a typical fintech application would be a lending club. So a lending club has more than 1,000 employees, has $4 billion or something like that in loan origination, and has been around for 16 years at this point in time. Whereas a platform like Aave, which is a decentralized lending system, has less than 20 people working there, originates 4 or 5 times as many loans, is actually positive in revenue, and has only been around for 4 years. It's very nascent. Probably most people on this call have never heard about that particular decentralized software solution, which I'm going to make a statement that some of these comparisons are going to be somewhat apples to oranges. I'm going to be open about that, but you can basically build Lending Club completely using open source software solutions and be less extractive and do not have to employ 1,000 employees. Maybe one metaphor that might be useful here is that when Uber introduced its app, it didn't replace all dispatchers, but it replaced most of them. Right? So one Uber app replaced thousands, tens of thousands of dispatchers. And that's kind of how I think about bankers, for example. They're dispatchers of money solutions. So another interesting example, and that might seem counterintuitive, but we just have seen the Coinbase IPO, which is somewhat the Netscape moment of the decentralized software solution space, albeit Coinbase obviously doesn't really operate on a blockchain. Coinbase uses database solutions to facilitate trading. And it's doing that with more than 1,000 employees and has trading volumes just shy of $1 trillion. Whereas a decentralized trading engine like Uniswap has less than 10 employees and in any given day has pretty much the same trading volume, has been around for 3 years. And so you can see how these efficiencies express themselves in lower overhead, both in terms of personnel and then ultimately also in terms of different types of frictions that we're going to get into later.